All right, good evening. Hope everyone has had a wonderful weekend. Let's see. All right, let's let a few people jump in here, and we'll get this show on a road. On the road. On a road. Guess on a road's not a bad term there. Let's see. Good evening, K Dub, Rather, Rowdy, CDN trade off. What's going on, guys? If y'all are in the South, hopefully y'all haven't had too much of some bad weather. What's going on? Yeah, me too. Yeah, we had a exciting week last week. Ready for some round two action, maybe? We got a big week ahead of us, no doubt about that, especially with everything going on. All right, as everyone's joining, let's get this let's get to moving. If you're joining us on social media, welcome. I appreciate it. Hope y'all are having a good evening. Feel free to check us out at stockdads.com. Feel free to leave a comment if you have any questions on any kind of ticker request or anything like that. We'll be happy to uh, take a look and dive into some of those. Let's see here. All right. Why can't I have a chat and stream open at you should be able to. Uh Fusca. There's definitely a way to do it because I got it open at the same time as well on my end. So maybe someone can type in and help you. There should be a if you're on desktop, there should be a open chat button on the live trading. Welcome, Blazing. Yeah, pop out window. All right, so this week, big week. We are approaching the end of Q1, believe it or not, and there hasn't been a shortage of stories that could potentially impact the market. However, the challenge really has been lying with identifying which of those stories are going to be the most impact. The current trading climate just really goes beyond just a few bank failures, as isolated as some of these events may seem to be. The current, uh, you know, we had our Powell FOMC meeting last Wednesday. They gave us a 25 BPS rate hike, and the Fed and Powell really made it clear that they are not going to be cutting rates at all this year. However, that has been met with some skepticism because the Fed futures are actually pricing in a 40, almost about a 50% chance of a quarter point rate hike sometime in July, maybe even September. So it's absolutely pretty crazy that the markets are trying to essentially call liar, liar, pants on fire on Powell. If you're looking for further evidence of expected rate cuts, just look at the 2-year note, which sits at 3.83%, and consider that the Fed funds rate is between 4.75 and 5%. Keep an eye out on Monday. So tomorrow there is a 2-year note auction. So we definitely need to kind of pay attention to that. And then if you take a look at the 10-year, the 30-year, and the 2-year, they aren't really trending. We are seeing some signs, and especially in the 2-year, that the momentum is getting there. The momentum does seem to be starting to swing a little bit in bullish of nature, and it may be wise to wait for a little bit of a pullback on an entry as far as those goes. Uh, we know that the FOMC anticipates tighter credit conditions, which they view as similar to rate hikes. Additionally, Powell has acknowledged concerns regarding for commercial real estate. It's worth mentioning that the Federal Reserve, has been clear since 2022 that the rate hikes were on horizon, and Powell has kind of reiterated. Powell has definitely done a good job at sticking to the guns and really focusing in on that federally mandated requirement by the Fed to keep inflation under control. Now, I know there's a lot of debates on there. Can they get inflation back down to 2%? There's a big argument out there, especially nowadays, saying that no, the new norm is going to be 5% inflation. So, of course, that's much further down the road to kind of even consider that argument. But, we still have to make a lot of progress on that front to even, really kind of think about that. So, one step at a time, and maybe we'll figure out. But the market is definitely forward looking, and we want to be ready for what the market does believe. So, moving on, did we have all these banking issues, and did SVB bond positioning set themselves apart from others? Is this really an isolated event? We've seen, you know, Credit Suisse and UBS situation kind of unfold. Now we're starting to see Deutsche Bank kind of unravel, and it is, I talked about this last week, how the European banking system is a lot different from the US, and what kind of spillover can we get, if any, from that, because the Eurozone interest rates were essentially negative to zero for much longer than what the US has been. And you put themselves in the same boat as SVB, where you know they had those low interest rates. Then they raised them. They spiked at 50 basis points recently. So we can only imagine what the damage control is going to have to be from there. I'll let you do your homework as far as that goes. Let's see. It does kind of remind me that, there's this quote from Jeff Kilberg of KMM Financial, who said, this is not a crisis. He's essentially saying this is just an isolated event. Basically, a bunch of novice bond traders mismanaging treasury books and some of the other banks. So yeah, it does bring an interesting insight that just because you know whoever's in charge, it doesn't always mean that they're a genius. A genius is not necessarily at the helm. So it's just kind of funny. Uh, it is also essential to consider, is this a systemic risk, etc. Bondholders aren't generally, too receptive of forced mergers and being zeroed out by a central bank. But nonetheless, the Swiss National Bank provided substantial liquidity assistance to UBS for its takeover. Now it's starting to rain. Let's see. Let's go over from a tactical perspective. We definitely want to kind of consider how everything is set up. It is likely that financials, the XLF, is going to recover. The big banks are going to recover a lot faster than some of these regional banks, the KRE, which will mean that the Dow and the S&P could possibly see some sort of upswing if we do get that to come to fruition. But the Russell, we know the IWM has been absolutely beat up to a pulp. It's going to take some time for the Russell 2000, the small caps, to take a lot of, to heal up and get back on the right course as far as everybody else goes, just because of the high weight that the regional banks have within the financial sector within the IWM. One of the big important things that we definitely have to keep an eye on, we do have Yellen. We got more Yellen this week. I think that's Thursday at like 3:30. So right at market close, we'll get more Yellen. We got a few things in between here and there. We got some earnings coming up, but for the most part, the big thing that I'm going to be watching is the core PCE. That isn't until Friday, so it's the last day of the week, but it is going to put things into perspective. The core PCE is what the Federal Reserve is using as their big inflation indicator. If core PCE goes up, watch for those rate cut predictions to get essentially smacked in the face. If core PCE ticks down, then those rate cut ideas will definitely start to take off, and then maybe we get a pretty bump up as far as the a little bit more on the bullish side of things. So it is going to be a pretty darn big deal, no doubt about that. All right, so with that being said, I know that was a lot that I just kind of blabbered off on. That was about like 10 minutes of rambling there, so I apologize. Let's jump into the SPY here. What we always want to do is we want to kind of start ourselves at the top and then work our way down to the bottom. Really, essentially, all right, you got three screens here. You got a weekly on the left side, you got a daily on the middle, and then you got an hourly chart on the top right. Most things we're going to focus on is pretty much the weekly and the daily charts. The one thing that bothers me the most here, uh, I'm glad I'm your hero. Whoever said that on Facebook, I appreciate it. One of the big things that I am watching on the SPY is this weekly squeeze here. The weekly squeeze continues to be in negative territory. You can see also that the moving averages are also acting as pretty decent resistance here as of lately. And overall though, we've really kind of been stuck for the past since February. You could say we haven't made really any progress. You know, this is a no, that's not what I meant to draw, but that's what I kind of meant to draw until we get out of this range of 407. There's not really much to talk about. I mean, this is neutral. You can see that the moving averages continue to be really sloppy. I'm using a new drawing tool, so I'm trying to get used to it because the other one just kept causing issues and freezing. I was like, it didn't want to act right with all my other programs for some reason. I don't know. So I'm trying a new one. So if I'm a little slow on these drawings, I apologize. You can see on these moving averages, they're really just crisscrossing above. There's no trend here. All right. So as far as the SPY goes, this is really just neutral. It's a big headache. It's best to day trade this, especially on a smaller time frame. Same thing that we've been doing the past few weeks. Nothing has really changed here. So we're just going to leave it at that. We do have support down here at about that 390, 388 area. We want to see this area to hold up. And then resistance obviously up here about that 400 to 401.50. And then, of course, 407.50 is going to be a key level. So if we can break through 401.50, your next spot is obviously going to be this 401.50 here, where we had a nice little double top here and just kind of rolled over. So that's what I'm going to be paying attention to. But as far as the bear side of things, I still have some pretty bear signals with the weekly squeeze here that is gradually getting worse here. And we know that the longer time frames are pretty much what steers, which guides us, and then we use our smaller time frames to really steer the ship. But if you look at the, even some of the smaller time frames, you can see that some of them are bullish. So we definitely have this interesting conflict here within the SPY. However, if we move on over, if I can figure out how to clear these drawings really quickly. All right, if we move on to the Qs, you'll see that everything's just a total different story. And there is a reason for that, and we'll kind of jump into that in a minute. If we take a look at the Qs, you can see on the daily, even on the weekly time frames, things are a lot better here as far as the squeeze and momentum goes. Even the moving averages are in correct alignment here. You got the 21 above the 50, the 50 is above the 200. We're above the year-to-date VWAP. There's not a lot of complaints here. The major point right now is really trying to decide how long, can tech continue to hold things up. But as far as a waiting thing, waiting goes, there's no financials here. There's no major banking issues going on within the QQQ. Our big holdings here is definitely going to be Apple and Microsoft. We saw continuation last week with last week's engulfing candle here on the weekly chart. So that was good to see. We're still kind of wrestling with this 310, 315 level. If we can break above that, there shouldn't be any reason that we shouldn't continue towards 320. Once you get above 320, 330, 335, you get a lot more spunky if you can get above this 315 level. Now, there is that argument here that, maybe we got ourselves a little bit of a tweezer top on the daily from Thursday and Wednesday. Still needs to come to fruition. If we do break down below 306, I imagine 302 should act as support. And if we do get a pullback here, I would like to definitely buy the dip. There's a lot of strength here within tech. Apple's on a big run. Microsoft's chart looks outstanding. The semiconductors, Nvidia, AMD, Broadcom. Let's see who was out there. Even Intel looked pretty decent. TSM looks great. So there's a lot of good names out there to possibly buy the dip. And so We definitely want to see if the Qs can make their way and push above this 315 zone. Uh, yeah, big tech continues to be quite impressive. They're doing a lot of the grunt work right now, and we'll see if things can continue. Now we can step into our problem child, which is the IWM. You can see here that we had this nice little breakdown below 170 on Friday. Now, does this set up for an interesting bull trap? Maybe. We do need to see some follow through, but really the momentum here is just absolutely, in shambles here, especially with these regional banks. If there's anything that, for me to even possibly remotely get long, I would need this thing to get back up above 180. I'm as for any of you that has spent time here in stock ads with me, that I'm not interested in catching a falling knife or trying to buy these dips. I'm not a dip buyer because things can keep on dipping. Don't catch a falling knife. That's how you get hurt. That's how you clap your portfolio. If there's going to be some sort of, you know, possible attempt to push this things higher, I have to see some kind of reversal pattern play out. Does that mean I'm going to catch the bottom? No, I don't care to catch the bottom, but I have to see things pan out and give me good signals on not just the price action and the structure, but I have to see it in my indicators. And frankly, I don't see that anywhere. Not yet, at least, until things kind of resolve themselves. Maybe we'll go from there. But as of right now, 170 acting as support. If we lose Friday's lows here, this thing can easily slip on down to 162, 162.50. Resistance up above is obviously going to be 180. This is definitely a short the rip kind of market. It is definitely shifting towards a more of a downtrend. So I definitely want to pay attention to these small caps. I kind of beat myself up last week because I didn't get short when I wanted to. So if we do get a decent little bounce here and we do start to see some rotation, then yeah, we'll see. Majority of the bank stuff still based on fear. Yeah, there's a lot of questions out there. Is this an isolated event? Can they contain it? How much can they contain it with a lot of the quantitative tightening that the Fed has done has been erased as of lately because the Fed basically essential is, really doing their best to prop these regional banks up. You have conflicting statements from Yellen where she said, "Okay, we're going to guarantee all depositors." Then she said, "Maybe not. Maybe we will. We don't know." Who knows what Yellen is thinking? So there's a lot of uncertainty. And if you take a look at the 2-year bonds, that is definitely also a indication of for fear. And if you take a look at the yen, the Japanese yen, that is also that can be more fear within the market. So there's a lot going into it as far as, and you're going to hear a lot of what are these credit spreads and all this other uh verbiage being thrown out, and there's going to be a lot to analyze. And this is something that we're going to be studying for quite some time to figure out what and how, which I think they already know what happened with as far as like SVB, and now they're trying to make sure there's not any spillover as far as these other banks, especially these European banks. We've seen it with CES, we've seen it with Deutsche Deutsche Bank. It seems to be having an issue, although I haven't looked to see if there's any news as far as Deutsche Bank goes. But as far as U.S. banks, big banks seem to be fine. I think J.P. Morgan even came out and said that, yeah, we're essentially good. But where have we heard that before? So yeah, IWM. This is going to be a tough cookie for the most part. Are they looking at no point change from the half point change they were talking about? Are you talking about the Fed rate there? Because they raised it 25 basis points instead of 50. And if they happen to have cut the interest rate, I think that would have sent a very, very bearish signal to the market, because that would then mean the Fed is panicking about something, and they're trying to put their heel down in the dirt and turn things back around. So if the Fed is seeing something to panic about, then maybe we should be panicking too. So it's a good thing that the Fed did not convey that message, especially after 2 weeks ago they said we're going to possibly raise rates 50 basis points, and they came back in and said, well, this banking issue with the SVB, FRC, and all these guys are isolated incidents. Bozos mismanaging what they needed to do. Uh, so yeah, the main fight continues with inflation, and like I said, the Fed said that they are going to continue to fight inflation until the job is done, and that there will be no rate cuts anymore for the year at least. There won't be any rate cuts this year, and like I said, the markets are going like, I don't know about that. We'll see. PCE this Friday should be fun. Let's see. IWM resistance 175, 180. Support 170, 165, or 162. Let's go to diamonds. Same thing here with the diamonds. This is also, where the big banks are more so in play. It's still sideways for the most part. You can see that we're just kind of stuck between 325 and 317. You can call it 315, even for a nice little 10-point range here. Until we break out of this range, there's not much to do. So if we do break below 317, down we go. Maybe watch some of those big banks there. Yeah, support 317, resistance 325. It should be pretty straightforward here as far as the Dow goes. So you kind of get the picture just by looking at these indices. What am I going to be looking at playing? I'm going to be looking at playing big tech. I mean, it's the only thing as far as like if I'm going to go long on something, everything screams to be playing big tech. Microsoft, hands down, one of the best looking uh, tickers out there, and they've been, you know, writing bullish puts on this thing like crazy. Even if you take a look at this monthly chart, I'll switch this chart over to a monthly. I mean, look at this thing. This thing looks crazy good. My first price target here on Microsoft is going to be this gap fill at about 286. If we get it, we'll see if we get it this week, but hopefully that'd be great. So 286 is going to be the first PT, and then our next big target is going to be 294. But you can see here on the monthly chart, man, you had this nice little trend line break on pretty decent volume. The monthly squeeze here is shifting gears. And usually when you get these shifts on the monthly squeeze, this thing can just absolutely carry on for quite some time. So I'm definitely going to be paying attention to what Microsoft is going to be doing. We know they're involved in the chat GPT, the AI, the whole AI space. So Microsoft's looking pretty darn good. And it's hard to be it's hard to be bearish. It really is hard to be bearish when you got names like Apple and Microsoft holding up uh, the front here. Am I going to wait for a Microsoft pullback? We'll see. If it gets to pushing, I will just hit the enter button and go in. But yeah, I would like to see a little bit of a pullback. But you can see here on the hourly chart, I mean, this trend looks fantastic. If we get a pullback to 275, yeah, I'll look to get into a position here to target that 286, maybe even enter a credit spread here and, play that support level for a short-term push up into that 286. Let's see. We can talk a little bit about commodities. I don't know if some of y'all talk about commodities or trade commodities. Yeah, we'll jump in those right now. As far as crude oil goes, this will lead into gold and copper. As far as crude oil goes, crude has had a pretty decent week, and that's mainly because of OPEC. OPEC, they reiterated their commitment and all this other good stuff. And if you're not familiar with OPEC, it's essentially the central bank for oil. That's what they do. They set the policies for oil output and all that kind of good stuff. So a weaker outlook means lower demand, and this is a cyclical commodity, meaning that price goes up and down as it follows economic peaks and valleys. It's begun to show more signs of a downtrend. You can see that we did get this breakdown. We could not break we could not break above 82.64. That's where the first problem started. Was right when we let me pull out my drawing tool real quick. You can see where we had this big trouble here at this 82.64. And finally, we just started to roll over. We broke down through support at 71. You can see these moving averages also starting to roll over and curl down. And we actually came up and retested this prior resistance and so far starting to roll over again. So watching to see if this thing rolls back over to 65. You can see where this bearish nature really kind of comes through. The structure is kind of busted on here. So I'm watching names like Zom for some potential downside. If I can, I'm beginning to not like this drawing tool. Not gonna lie. Let's see here. Oh, I guess I could have just clicked one button. If we take a look at Zom here, Zom. Yeah, it's not too bad, but it's also starting to roll over. It did hold that 99 100 level, got back up to its daily 200. I'll be looking for this to see if we can roll further back down. Also, like CV, I believe it was CVX that I looked at earlier as well. Same characteristic here. You had this nice little box between 166 and 158. You got that push down, had a nice bump back up, rejected, coming back down. So you're going to see a lot of these names. Oxy, Warren Buffett's favorite. They own like a boogie ton of shares here in Oxy. Warren Buffett continues to buy Oxy, continues to buy the dip. I'm not too sure what his average price is, but I think it was around that 60 mark. So he's a little bit struggle here, a little bit. Maybe not. He's probably selling covered calls on it or something, whatever, the big money does. Oxy definitely getting this downtrend look to it. So I wouldn't, it's kind of hard to fight Buffett. So I might not touch Buffett. Let's see. Let's move on to Nat Gas real quick. Nat Gas, you can see has been in better shape, up $10 when inflation hit its peak up here, and then we just kind of just absolutely just vomited all the way down. Now, the bullish thing here, really the only bullish thing about natural gas is that it hasn't made a lower low. I'm staying away from nat gas plays. There's just no sense in being in them right now. Maybe they'll turn sideways for a little bit and we'll kind of go from there. But, it remains, pretty gross. It's just uninspiring and it has bearish momentum. So I'd rather just not touch it from any point of view. If we take a look at copper here, copper, this is uh, other the other commodity that tracks economic outlook. If copper is doing good, usually that's a good sign for the economic growth, the economic outlook of everything. Copper continues to hold up pretty well. It's pretty interesting, and it does. It is remaining in that neutral bullish position. We are above the main moving averages. We're above the 200. We're above the 21. We're above the year-to-date VWAP. It's kind of sideways. That's why I'm more neutral, if anything. If you look here on the weekly, it's just kind of riding that 50 weekly. I would like to see this thing get back above 4.10, maybe 4.15 to push up. But as far as things go, as long as this thing holds above 4, I think we're good to go here on copper. But if we see another breakdown like we did a few weeks ago, I don't think that's, it's not really the best signal there. Let's see. I know my favorite copper play is Freeport McMoran. It's usually my go-to as far as copper. It could look a little bit better as far as things go. Aren't they safe plays? Are they safe plays? From a cyclical point, I would say probably more so gold. I definitely like gold a lot better than copper. Gold is kind of a butthole to trade. Anytime that I've traded it, I mean, this thing is just kind of wacky. It takes a lot of patience. There's a lot of movement based on the real yields or the real interest rates. The real interest rate is the difference between the nominal yield of a bond and the rate of inflation. If you want to write that down, when those rates narrow, gold pretty much has the green light, which right now it does. So currently, gold from a technical standpoint, it is in an uptrend. So I would love to get a pretty decent buy on this. If you look at the monthly chart and you zoom out, like way out, you're going to see the most obvious cup and handle pattern. Everybody sees it. And that is a little bit of a concern. Usually, the more obvious the pattern, the less likely things will play out. But it is there, and we definitely want to take note of it. With that being said, this looks pretty darn bullish. I would love to get in on gold on a good dip buy. I wanted to get in last week, but I just didn't quite get the dip that I was looking for. So I'm not quite in gold just yet, but I am most certainly looking to get into gold, and that's whether just buying bullion or buying options. However you want to play gold. I think gold looks fantastic here at the time being. Take a look at the dollar. Move on to some of these forex. Dollar, this thing's had a nice little breakdown. As far as things go, it did have this nice uptrend when inflation was going out the wazoo. It's cooled off a good bit. We rolled over a fair amount since then. And, since the breakdown, this thing continues to trend with a bearish momentum for the time being. So, take that as you want to. Let's just kind of go ahead and jump to Ionic. I see you're waiting on thoughts on Baba. Let's go to the 2-year. Like I said, we got the 2-year note auction on Monday. The 2-year has been a pretty important indicator to pay attention to. The U.S. is looking to auction off 42 billion in 2-year notes. These will definitely mature in March of 2025. This is a pretty big deal. It is a barometer of for the Federal Reserve. 2-year yields fall when there is an expectation of less hawkish monetary policy. So if quantitative tightening is going to run into a roadblock, well, we should see something here. This is also a big indication of fear if those lower bond yield bonds are outperforming the longer term. So we definitely want to pay attention to what is happening with the 2-year. Moving on to the HYG junk bonds. This has obviously been one of my favorite indicators for a while now. It's been on my notes for, I don't know, since we started doing these notes. This is the junk bonds. It is still has not been able to get above 75. It looked like this thing was going to break down about 2 weeks ago, but they held the line for the most part. This does confirm, or this doesn't confirm what is happening in big tech is broad based, and you kind of see that across the board. We know that as far as the financials, the small caps, big tech is leading the way. If we take a look at the RSP, the equal weight S&P 500, you can see that this is technically in worse shape than the SPY. I want to pay attention to if this thing slips back below 137. So yeah, there's that. HYG definitely benefits from a drop in the real yields, just like gold. So yeah, just a lot to kind of pay attention to. All right, so I know that was a lot to digest. Let's kind of look over a few things here. Baba, yeah, let's take a look at Baba. Now that I've kind of blabbered on, but it's good that we take a look at these things because it's understand to observe the bigger picture before we dive into some of these individual names, because we don't want to fight the motion of the ocean here. So moving on over to Baba. What do we see here on Baba? Looks like a pretty nasty downtrend. You can probably argue that we haven't really made much progress since what is that? June, July of last year. We haven't really made a new low since October of last year as well. We're just really in this sideways grinding motion. You can see here on the hourly. The hourly is a little bit better. You did have that 21 crossing over to the 50. we're going to come up to resistance right about that 90 level. We should kind of stall out right there, and then it's just a matter of, can this handle a pullback pretty well? And from there, how does the market react? Will it just roll over? Do we continue to turn sideways? Uh, if you get above Thursday's high, sure, you can day trade this long, but the setup is definitely kind of off-putting. If you want to, maybe if you can get in a good credit spread down here at 80, that could be a possible good play. And then you're going to have pretty big resistance up here towards that 90, 93 level where that daily 200 is. So break above 88, you get a little bit of a green light. And once you get above 88, should see about 90, 92. But I definitely don't want to see this break below Friday's low either, about 85.50 if you want to be on the bear side. If we take a look at KWeb, China ETF, little bit sloppy, despite some of the movement that we've seen. Had a nice push a few weeks ago, and now it's just kind of, been a little bit dry since then. We had a nice little zone here, head faked, flush down, pretty good. And yeah, we'll see if this thing flushes again, or what's kind of going on. FXI, I believe, is the other China ETF. Same thing. Not much of a clear story here. Looks exactly like Baba. Not much actionable signals as far as everything goes. Booze wants to look at McDonald's. I'm moving in. McDonald's looks pretty good. I don't really have any complaints here about McDonald's. Nice little push here, 21 crossing above the 50. You're getting look at this squeeze. This thing's been setting up for forever, even on the weekly time frame. You have earnings out of the way, which is good. If you can break above 270, let's clear out some of these drawings here. Definitely want to keep that 260 level. Man, if you bought at 260, you did fantastic. Yeah, this thing looks pretty good. Even the hourly shaping up really nicely. You got the hourly squeeze that's doing its best to shape up there. My oscillator here is in alignment as well. Yeah, check in on those lower time frames. They look pretty good. You're just kind of barcoding on this weekly chart, so just kind of be mindful of that. It might be, I would say, grab as much time as you can, especially if you're playing options. Obviously, you're playing common shares, shouldn't be a problem. Should be less of a headache. But if you're playing options, go out in time, maybe even 3 months out to try to push. If you need to do a debit spread, do a debit spread if you want to play some shorter term time frame. But yeah, this 260 level is holding up very nicely. You're just kind of coming up to areas of resistance. All right, let's see here. Yeah. As far as things go, I'm going to be focusing in on the NASDAQ. So that means I'm going to be focusing in on the XLK, the XLY, the communication sector. If the dollar continues to weaken, it could be a clue that investors are essentially looking elsewhere. If we look at Germany, let's see, EWG, Germany looks pretty darn good as far as things go. EWG, the DAX, pretty interesting stuff here as far as Germany goes. Is trading above its daily 200. That AMD looks like it's going to be green overnight. Yeah, semiconductors, little extended. I will, I feel like I should mention that it is a little bit extended. You got a lot of air between price and the moving averages, which, not a terrible thing, but you just kind of want to be aware of it. Maybe you're a few standard deviations above the mean here. But as far as things look, as long as these smaller timeframes continue to hold, those do present, good dip buying opportunities. But if they do start to fall, they can fall pretty hard. So we also want to be mindful of that. Let's see. Oh yeah, another one. Kind of wanted to say this too earlier. I know I was kind of rambling a good bit, but as far as Microsoft and Apple go, they hold 13.3% of the S&P 500 weighting and about 47% of the entire XLK. So wherever Microsoft and Apple go, the Nasdaq and most definitely the XLK should follow, and possibly the S&P. It just all depends, how financials are kind of working out. As far as sectors to focus in, I am looking at obviously semiconductors, the SMH, even the SOX look great for dip buy opportunities. I'll be looking at those. I'll be looking at Google. Google is going to be on my watch list for the week ahead. It needs to get above 106, and we'll see if we can get a good push off of that. Like, let's see here. Meta's been a pretty good one. Netflix has been pretty great for us. Uh, break above 207 here on Meta. We can definitely see a pretty good move here. Netflix was a fantastic trade last week. Love to get some more action here. Now, if we do break above this 331, we do get there's a tiny gap fill to about 335, but this thing can definitely move as we've all seen, maybe even towards 340, 342. Looks pretty fantastic. Welcome, Zirconia Hands. You're late. No, I'm just kidding. CRM. Let's look at CRM too. CRM looks great. Above 190, we can see that 193 area. This thing looks to set up pretty nicely. We got the bullish structure. We got bullish momentum. The hourly squeeze, hourly oscillator looks really good here. So I definitely like the look of that. If I'm looking for some bearish trades, sure, I'm looking at Caterpillar. Cap below 211 looks pretty good. Johnson and Johnson, this thing's beat up, man. We had a little bit of a breakdown below 150 there. If this thing breaks down even more, she can definitely fall a little bit more, maybe even towards that 145, 144 mark. Let's see. Let's take a look at Spotify. I like it above 133.50. We weren't able to do that last week, so maybe we get a decent opportunity here next week. Also, like Home Depot for a possible short. You can see where all these little Dow names look pretty gross here. Home Depot, maybe even JP Morgan if big banks really want to take it in on the chin. JP Morgan, you do got a little bit of a hammer, but I don't like where it closed. It closed right below the daily 200. Let's take a look at Goldman. Some of these big banks, even the big banks look pretty trashy. Definitely got a little bit of this Darvis box situation setting up here. So we're just kind of have to wait to see where that range expansion goes. Let's see. Yeah. McDonald's actually in one of my bull scans there. Pepsi, another one. This one looks good. Needs to clear 179 and some change to push 180, 182. Let's see here. Do Hershey's. I mean, look at this. This thing's breaking out in the new all-time highs. Who would have thought? You had a nice break. I'm pretty sure Professor is all over this one. You had this nice break above 242. You had this awesome retest. Look at this retest here. 242 holding, and boom, launch pad up to 248 already. So this looks really good. Let's see here. Let's go to TTD trade desk. This one's going to be on my radar. Above 60.45. We're starting to look pretty good here, even on the weekly charts. Nice weekly squeeze, nice daily squeeze. Hourly is shaping up to fire along. I mean, this thing looks really good. Need some Darvis. Yeah, Darvis. Darvis box, I'm telling you, you can find some great setups. ASO, another one. I mean, we played this one. At least I did. I believe I announced that I was in ASO. ASO, you had this big breakout above 57. This thing launched towards 64, pulled back, gave you another entry, hit 64, came all the way back to 57 for, I don't know, round 2, round 3, launched all the way up to 67. Like, holy cow! Like, what are we doing here? Academy Sports, Verizon. This thing looks busted. AbbVie. AbbVie looks fantastic as far as a bullish trade goes. So there are definitely setups out there, even outside of tech, that we can possibly take. Oracle, one of Penny's favorites. This one's trading back in its range. Did have a little bit of a scare here when it broke down on earnings, but it's come back through. I would like to see this get above 90, maybe even 91 before doing anything reasonable, but it's setting itself up there. No doubt about that. Let's take a look at Shop is another one. This one's kind of interesting. It's a little messy. Maybe if we can get above 47, then you get a nice gap fill towards 51. That'd be a nice little options play there. COP, pretty bearish. This is another energy play. Need to see a breakdown below 91. Starbucks. Yeah, watch a break of a below 96.35 on Starbucks. That was pretty good for a nice little bearish trade. General Motors. I mean, this thing's kind of I probably won't touch General Motors. It's still stuck between 30 and 43. Not much to really do with this one. Donut showed up on one of my scans. Look at Donut. D-Nut needs to get above 16. Let's see. NVIDIA, Okta. Yeah, I talked about a lot of these. AVGO, Broadcom. Looks great above 645. Amazon, another one to watch. If the XLY can get itself into gear. Lulu. Probably won't touch Lulu. It's a little bit sloppy here. Just trading sideways. Let's see. Let's go through a few more here. Obviously, QCOM. Another semiconductor name. And then, of course, I got a lot of airlines on some of my bearish scans. AAL trying to hold 1350. If this thing falls down, I mean, where's your support? I mean, your support's all the way down like another 1.5 on AAL. JD, kind of gross. I don't like really touching JD. Let's go look at Etsy. Etsy, I know we got a lot of lines on this one. Maybe if we can see some follow through on that one, I probably wouldn't mind it. Berkshire. Yeah, look at this. Yeah, this nice little box here. Almost got a little, had a little head fake there and came on through. Broke below 297. Trying to hold up from there. Man. 300 might be resistance, and then down you possibly go. Let's see. Boeing. Boeing looks pretty bearish. Got a daily squeeze looking for a short. Weekly's starting to roll over. Hourly, you had this nice jump to the hourly 21. Might act as resistance as well. I do have a position on Boeing. I'm short, but I have a stops up here at 202, 203. Net and LMU. Net, let's see here. It's not bad. It's not great either. Let's see here. Let me see if I don't have any good signals on those time frames. Let's see here. Let's see what the lower time frames look like. I think you're that one. Yeah. Let's see. Nope. No good signals here. So a lot of maybe stay away on net. Let's see if net, I would take the break of Friday's low. That would put you a break of VWAP for a push back down to 53. It's very sideways. And then a break above 58.50 for a push towards 60. Weekly time frame. It's very sideways. It's very messy. I don't have any good signals other than maybe stay away from net for the time being. You. Are y'all putting like demon devil horns everywhere? LMU, another semiconductor name. You do have earnings coming up this week. I'll stay away from earnings and see what happens. But as far as this setup goes, not too bad. Not too bad. Break above last week's high, 61. You get a continuation of that pattern. Not much room. You got a lot of wicks up here that you got to deal with. Maybe room to 64 there. Yeah, but you got earnings coming up, so kind of heads up on that. Hourly chart looks good. Looks very bullish. You got a little bit of a stair step going on here. 61. So that would put you at, if we get continuation, yeah, that does give you a pretty nice move towards 64. Yeah, watch that break for 61, 78, 62 for a push towards 64. I think that'd be pretty interesting. Roblox. Robux, they make so much money. Let's see here. A little tight. Let's see. I got a good signal on the hourly. Weekly looks good. Daily looks good. Nice little pullback here. Maybe just needs to clear 45. 45. Watch for a break of 41-ish as far as that goes. Nice little tight range. 45, you get... That was a nice pattern break there. I'd say use 50 as your psychological level there. Maybe even 47, you could argue. 47, then 50 as your psychological battle. 51 even. 51 even. Let's see here. Hourly could be a little bit better. That's bullish. Yeah, play that break of 45.38. I wouldn't mind that. Pfizer, it's in no man's land. Need to break above 41 or break below 39. I mean, this thing is absolutely crushed through. Let's take a look at the XLV, the healthcare sector in general. XLV clearly in a downtrend here. You had this nice little breakdown below the daily 200. That means we're in the wrong side of the hemisphere here. Indicators are pointing down. You've been riding the daily 21 down for quite a good bit. Pfizer is going to be in this sector. If anything, look to get short on a breakdown or on a rip unless something changes. You do got a daily squeeze here. Weekly squeeze is still pretty bearish. Mm-hmm. Yeah, I like that resistance at 41.18. Hourly, got a squeeze on the hourly, but that is pretty bearish here. Yeah, 41.18 is going to be your resistance level. So, not XLY, XLB. Let's see here. Double check a few things. Let's see. AbbVie's going to be your biggest holding there. So maybe AbbVie's the thing that's holding up healthcare. Let's see. Let's take a look at Lilly. Why? Isn't this what Corp? Isn't this who Corp works for? I think so. It's not terrible. Let's see who else. We got Merck. Looking at these charts, if I were to pick one, like between XLV and the XLK, I have better signals here on the XLK than I do the XLV. Big tech, that's where it's at. Let's see, SoFi and Google. I think SoFi is probably one of the most asked tickers in the Discord, and I understand y'all got y'all's, the fundamental analysis going on there. There's a lot of questions. I know they're suing Biden or whatever with the whole student loan thing. This thing is a mess. You know, I can't recommend it at all. From a technical standpoint, this thing is just beaten up to a pulp. You had a nice little triple top at 24. You flushed hard, all the way down to $4. I mean, how much nastier can you get? 850 resistance, $4 support. Now, I guess your big argument here is that it hasn't made a new low, just kind of like how we looked at natural gas. Uh, you can maybe get away with a nice little day trade above 590 for a what you get a 20-cent move for a gap fill. There's better things to play. If anything, if you break 519, you can short it back down to 424. Uh, I don't have anything good to say about SoFi. I'm sorry. Even though I got an interesting daily thrust. It's an early signal on the daily. So if you break 592, see what happens at about 630. But I don't see what y'all see in this stock. I'll do your due diligence in there. I'm not a fundamental player. I play the technical analysis on the chart, and I don't have anything good. I have some good, I guess, about it, but I don't have a whole lot. I think there's just if you're looking for something, cheap, cheap doesn't necessarily mean, good. I mean, this thing was $25. I mean, hit a high of almost 30 and just it hasn't been the same since then. All hype, no game on SoFi. It reminds me of Palantir. All hype, no game. Everybody's in it, and you got to deal with the federal government with this thing at this point. But from a technical standpoint, maybe there's something there. It's not a lot. Watch me eat my words next week. It is what it is, though. But I'm not. I can't. I just can't. If you want to play the break of 592, have a tight stop. I'd definitely short it below 519 though. Google, yeah, Google is one of the players that is on my bullish radar as far as big tech goes. Need to get a break above this. I mean, we could probably day trade it tomorrow above 105.50 for 106.50. Gives you a nice little point move. 108. Hourly structure. Look how fantastic this looks. You got the 21 over the 50. The 50 is above the 200. They're all curling up. You have a nice little hourly squeeze shaping up. You got a weekly squeeze here shaping up. Yeah, this is looking pretty bullish as far as things goes. Now, as long as it doesn't break down, of course. But for the time being, big tech, including Google, looks pretty darn fantastic. The communication sector had a pretty darn awesome ride last week, especially with Netflix. So yeah, I'm definitely liking the looks of Google. If I were to, you gave me SoFi and Google, if I were to pick one, it 100% would be Google over SoFi. Let's see here. Square or Block. Block is, despite the news, the Hindenburg research situation, they came out with their big nasty mean report on Square and Jack Dorsey, former CEO of Twitter. They came out with their mean report, and she gapped down. She gapped down pretty good. But if you look at the chart here on the daily, I mean, this thing hasn't gone anywhere since what is that, May of 2022. You're sideways between $91 and $51. So you're at the bottom end of this range. If 51 holds, that could possibly be a pretty good dip buy. Now, if you do lose 51, you need to be aware of, okay, where can I go next? Where's my next support level? If you lose 51, there's plenty of more room to fall towards 42, maybe even 32. So there's definitely some wiggle room to the downside if she doesn't seem to hold 51. But we can see where this 51 to 55 zone has definitely held up pretty well over the past year. But at the same time, you got a lot of work to do. This thing used to trade at $300. This thing's fallen from grace since COVID. Uh, this was one of those major names during the COVID rally. And since then, you know, it's no longer been a shining glory of the market. It's been a busted shambles. uh, so yeah, 51 to hold could be a really interesting dip buy, with a possible play back up to that 91 level. It'll take time, of course. Things like this, they don't heal on a dime. When you talk about the market cycles, as far as markup, distribution, markdown, accumulation, and so forth. Is this accumulation? Possibly. You got that sideways movement. It's been sideways for quite some time. It can be sideways for a long time. Uh, it needs some healing, of course. Whether that as far as leadership goes, its earnings reports, any kind of fundamental changes. It's definitely got a ways to go. We know that. So this not going to change. It's not going to turn and go back up to $300 anytime soon by any means, if that. But it is going to take some time for it to turn over into a new leaf. So yeah, Square. I'm glad you brought it up because that Hindenburg research paper was a fun read. If you didn't read it, I believe it's in the watch list channel. I put out a summary, I do believe, on that. So yeah, Square, pretty interesting stuff here. We'll see what happens. I'm pretty sure they're suing them. It was kind of funny. They had, Hindenburg, it was like this huge article, and then Square or Block comes out with a 3-paragraph response. Nuh-uh. Nuh-uh. How dare you? We'll sue you. I can't believe it. Carvana. Yeah, the Carvana, $380 at the all-time high. You're trading at $5. I mean, imagine being the guy that bought the tippy top at $376, and you're now trading at $3.55. I know this is a short squeeze candidate. It's got shorts written all over it. You had a nice little pop here from 355, it looks like, to $20. Yeah, that was a heck of a run. Earnings missed minus 761. Jesus. Yeah, this thing is it's one of those things I wouldn't even touch it with your money. Does that mean you can't trade it? No, you can still trade it. Everything's worth trading. Same with SoFi. I can't. I just can't. Maybe if you're Penny Slayer, I know Penny Slayer has stuff with SoFi. Carvana, same boat here. I mean, what are we looking at doing here? Are we just trying to play the possible short squeeze and take advantage of all those shorts out there in the market? Because if you look at this is technically sideways. You're stuck between 355 and really 20 with that big bump. It's kind of messy. Sideways. You're finally got a flat 50. What's going to happen with Carvana? Does anybody? I see Carvana cars every now and then. They have their little Carvana license plates or whatever, but I mean, how much money do they make? I mean, really, clearly not much, because their earnings was just absolutely terrible. Minus $7.61. That's a lot of cash. That's a bad EPS. So yeah, 10. If you want to try along 1037 with a stop below, I'd use this low at 650 and keep it tight. I don't like these charts at all. I don't even like looking at them. Makes me want to gouge my eyes out. Would you rather trade Carvana or Microsoft or Hershey's? Trade what's moving, not what's not moving. Why are we trying to fight the big money? Big money maybe not always smart money, but they have their reasons for shorting this thing into the ground. Why do I want to step in front of that train? Is it like anything like AMC? Yeah, AMC and GME freak runs, but you're not gonna. I highly doubt you're gonna get that with Carvana. So yeah, I don't know what the and it's not to berate or anything. It's just I don't see it. I don't see it. 10's going to be a resistance support at 650. That's my analysis for you on that one. All right. Any other tickers? Bank of America. Yeah, Bank of America. I mean, this thing just flushed. Wells Fargo, Bank of America. This thing gave a great move last week. I mean, you broke down below this 2760 in a fantastic fashion. You came all the way down here on the weekly chart here towards 2630. 2630 below that, there's a nice gap fill all the way down to 2430. I think it'd be fun to get in on that if you didn't catch that first breakdown, but you had this nice little box here between 30 and 2760. You broke below 2760. You even gapped down, tapped that 2630 just ever so briefly. And now you came back up. Will this continue to hold? We'll see. This looks bearish with bearish momentum. If we get a bounce, I mean, the damage is done for the most part. Short the rip. You got the moving averages pointing downward. You got the squeeze momentum pushing lower. The oscillator is in negative position. A little bit error, but it is what it is on that. I would look for this thing to fill that gap at 2430. The hourly time frame, you can see it's not. You came back up towards possible new resistance up here at 2760. So that's what I would look at is if you get a push back up to 2760, look to see if that holds as resistance. The thing is with the banks and the financial world right now is that you have to deal with the invisible hand that is the Fed. The Fed can at any point, or even some of these Eurozone banks, Lagarde with the Eurozone leadership, they can always come out and there'll be some crazy headline to save the banks, everything's good, everything's peachy keen, and you can have a good crazy rally. And if that happens, that could definitely help the overall market. But when you have that, it does make things a little bit trickier, just because you don't really there's that lingering unknown situation. Wells Fargo here, just absolutely beautiful breakdown. Below 37, just absolutely flushed. You got earnings coming up too. That'll be fun to watch. But yeah, Bank of America comes up to this 2760. We'll see if that prior support becomes new resistance, as they do say. And then that could be a possible place to get short. And then see where the risk reward sets up from there. Uh, Generally speaking, I wouldn't want this thing to get back above 30, or 30 could be an interesting spot to also get short. So I'd look for 2762 to act as resistance and kind of short it back down from there. Maybe even get that gap fill. Let's see here. Futures, see what they're up to. Had a nice start to the evening, but there's a lot of time between now and market open, as you can see. We're just kind of flat, but a little bit of a continuation. Bonked our head on 40.25 on ES. NASDAQ, same thing. A little bit of a continuation from Friday, just kind of coming back in now. We'll see how the European Open goes. You're welcome. All right. Any other questions? I know we've ran pretty long. Let's see. So, game plan, watching big tech, watching semiconductors, watching communications, watching the XLY. If I'm looking to get short, I'm looking at energy. I'm looking at some of the healthcare names. I'm looking at financials, the KRE with the regional banks. and maybe even some of the builders like we mentioned with Caterpillar and all that. But all right, I will get my watch list posted for tomorrow. You're going to get my notes as well. If you're in the Discord, if you're on YouTube or any of the other social media, I appreciate y'all coming out, asking questions and all that kind of good stuff. But all right, have a good rest of your evening, and I will see you guys for the live trading session in the morning. But all right, if y'all have any questions, feel free to reach out. I know I went over quite a good bit. If I went too fast, just let me know. If you need me to, send you my charts and analysis, just let me know, and I'll be happy to take a look at those as well. And of course, this is recorded on YouTube, so you can go back and rewind if you need to. But all right, good stuff. Great session. I will catch you guys in the morning. I'll get this posted and we'll take it from there. All right, guys, take care. Thanks a lot.